Hello, everyone. Good morning, good afternoon, and good evening, depending on where you're seeing this video from. I want to welcome you all to Trade with KHFX as usual. And today's section will be discussing about candlestick patterns. And before that, please do well to like, share, and subscribe so that whenever we post a video, you'll always be able to get a notification. So just like I said, we will be discussing about candlestick pattern. What is a candlestick pattern? A candlestick pattern represents price movement within a specific time. You know, in Forex, we have different time in which we trade Forex. We have 1 minute, 5 minutes, 1 month, 1 week, 1 day. So every candle represents a specific time, neither 1 minute, neither 5 minutes, neither 1 hour, depending on the time that you want to trade or you are using to trade, depending on the time frame. And each candlestick shows 4 key things, which are open price, close price, high price, and low price. What do I mean by open price? Here on my screen, you will see a green candle while you will see a red candle. This green candle represents a bullish candle. This red candle represents a bearish candle, just like normal bullish and bearish, or you can as well say this green one represents a buying candle, while the red one represents a selling candle. And now we have a particular price where this green candle open, that is an open price, and a particular price where this green candle closes, that is close price. Reverse is the case over this selling candle. If you watch, you will see we have a particular price where this candle open, and we have a particular price when it closes. Opposite of a buying in Forex is selling. Anything that happens when market is buying will always happen when market is selling. So the opposite of buying is selling. Opposite of bullish market or whatever thing that's happening when market is going up, when the market want to reverse to start selling, it will also happen. So this is an open price from this level on this green candle, from this level to this level. This is an open price, and this is a closing price. On a selling candle, this is open price and this is closing price because it's a selling candle. Okay, now think of it like a story of what buyers and sellers did during that time. Bullish candle is green candle, which I just explained. Buyers are in control. Bearish candle is red candle, which I just explained. Sellers are in control. Candlestick pattern are specific formation of one or more candles that gives clues about what the market might do next. They show market psychology, buyers versus seller strength, possible reversal or continuations. Type of candlestick pattern. Number 1, we have reversal pattern. In a candlestick pattern, we have reversal pattern, which is number 1. We have hammer. We have hammer. Now, what do I mean by hammer? If you watch here, you know we have inverted hammer and hanging man. And watch closely, you will see that this market is selling. The market is selling, and immediately it formed this inverted hammer. That is the reversal pattern. Immediately it formed this inverted hammer. The market reversed to the upside. The market started buying. This market was selling until this reversal pattern on a candlestick pattern formed and the market reversed. And mind you, market doesn't just reverse. There must be a particular zone that market would react first before the market will reverse. It's either support or resistance, which I spoke about on a previous video. Is either support or resistance. And look closely here, this is a hanging man. That's the opposite of this inverted hammer. This market was buying. It was buying comfortably until this reversal pattern formed. This candlestick reversal pattern formed and this market started selling. This is a hanging man and this is invert hammer. The market was selling until this pattern formed. It reversed to the upside and this market was buying until this pattern formed. It reversed to the downside. Understood? So do you understand? And number 2, under reversal pattern, we have shooting star. Now let me show the example of the shooting star. Here we have shooting star. What do you see here? Remember, like I said earlier, bullish candle is usually green, while bearish candle is usually red. Now, this market was buying until this shooting star reversal pattern formed. This is a rejection candle that shows buyers doesn't have much strength to continue, that sellers are beginning to pop in. So this market was buying. This rejection shows buyers doesn't have more strength or momentum to keep buying, that sellers are beginning to dominate. Sellers are coming in. This is why this thing rejected. And what do you see next? The movement reversed to the downside because sellers are dominating. Sellers are already in the market. Buyers doesn't have the strength or momentum to continue. That is why you see this reversal pattern shooting star that happened and the market started to sell. The market keeps selling. That's why when you trading, keep attention and close attention to candlestick patterns and chart reversal patterns, which I'll be making a video over chart reversal pattern. Our next video might probably be chart reversal pattern or depending. So what happens after the shooting star? Market reverse to the upside. So number 3, we have engulfing bullish and bearish candle. Engulfing bullish and bearish candle. Engulfing bullish and bearish candle is when strong take over from buyers or sellers. Let's assume the market is buying or the market is selling, and automatically, when market is buying, automatically sellers takes over buyers with a strong move. When market automatically become volatile against either when market is buying or when market is selling. Let's go to the chart. Okay, now this is bullish engulfing pattern. Now, what happens here? The market is selling, just like I specify, I specify between the green candle and the red candle. So market is selling, and automatically an strong engulfing candle against its previous move just happened. This market is selling. Automatically a bullish candle that is very strong and healthy, strong engulfing candle happens. If you're on that market, just start buckling up. Just start telling yourself it's about time I leave this market, because there's not going to be any reason when market was trending up or going down, automatically an engulfing candle happened, a strong candle against the previous move just happened. It shows that it's either sellers or buyers are becoming strong. Not even becoming strong, it's either sellers have jumped in or buyers have jumped in strongly. So what usually happens is, whenever you see something like this strong engulfing candle, you tell yourself that, whoa, it's time for me to buckle up. It's either you start locking the profit you've already made, or you close your position, because that market is going to reverse. It's one of the strong candlestick reversal pattern that we have. So the number 2, we have a continuation pattern. Continuation pattern. Trend likely continues. That's a continuation pattern. Let's assume market is buying. This is a continuation pattern. Continuation pattern is what leads to a trend. But now we are discussing about candlestick pattern. So we still have a candlestick continuation pattern. So now markets likely to continue to the previous direction. So under continuation pattern, number 1, we have doji. Doji is an indecision candle. Candle that doesn't have a strength to is either go to the upside or a strength to go to the downside. Is either market may pause before continuing. That's what do I mean by market may pause before continuing. There must be, when market pause, there must be is either consolidation or ranging, but market may pause and be in one place for some time before it start going to the direction, before it continue to the previous direction. Now let's jump into the chart. When we talk about doji, is an indecision candle. Look at this candle. It's not healthy. When I talk about indecision candle, is when candle is not healthy. It's not buying, it's not selling, it's just in one place, middle. Indecision candle means a candle that doesn't have strength. It's either to continue buying or to continue selling. So probably it might be in this position, a particular position for some time. It might be in a particular position for some time before it's either continue to the previous move or continue to the downside, in whichever way. But indecision candle is a candle that doesn't have strength or momentum to continue. Maybe market is going to range for some time before it continue to the previous direction. So here we have inside bar consolidation before breakout. Inside bar consolidation before breakout. Now, when you talk about inside bar pattern, what do you expect next when you see inside bar pattern? When you see something like this, there must be a consolidation. Now, what do I mean by consolidation? Consolidation in a situation whereby market is within a particular buzz for some time before breakout. It's not buying, it's not selling, it's just ranging sideways. It's not buying, it's not selling, it's just sideways ranging. That is inside bar pattern candlestick. Whenever you see something like this, just expect a range, just expect a consolidation, just expect that this market is going to be in this particular area, in this particular buzz for some time before the market will continue its direction. Is either breakout to the upside or breakout to the downside. That is inside bar pattern. So market is likely to range for some time before it continue to the direction. The effect signal pause or continues for a while. Market will range. I don't know. Yes, I think my previous I talked about market structure. So when you go to my previous video, you'll be able to understand what I mean by range. Market doesn't have a particular direction. It doesn't have a particular direction to follow. It's usually in a particular place. You can call it a ranging. You can call it accumulation, or you can call it distribution. You understand? So usually in a particular place, it's not buying, it's not selling, just ranging. And mind you, sorry, candlestick patterns don't move the market by themselves. I just want you to understand, just pay attention. Candlestick patterns don't move the market by themselves. they reflect what traders are already doing. Listen very carefully. They reflect what traders are already doing. Here's how they affect trading decisions. Just listen. Here is how they affect trading decision. Candlestick show entry points when to buy or to sell. Candlesticks show entry points is either when to buy or when to sell. You don't just open your laptop and start selling or start buying. Chart must tell you this is when to buy or this is when to sell. That is why patience is also needed. Number 2, helps with timing the market. It helps with timing the market. Number 3, indicates strength or weakness of a trend. Candlestick can indicate strength or weakness of any trend, any market structure. Number 4, help identify reversals early. Candlestick will help you to identify reversal when you're on a bullish market or you're in a bearish market and that market want to reverse. If you're on a bullish market, want to reverse to start selling, candlestick will identify the reversal first before any other thing. And remember, important rule, never trade candlestick patterns alone. Never trade candlestick patterns alone, because when we talk about strategy is a combination of different things that is happening in a market. A combination of different things, that is what makes up that strategy we talk about. So never trade candlestick pattern alone. Always combine them with support and resistance. Support and resistance. Market structure. I've taught market structure. You can go back to my previous video to go and check. Market structure. Trend direction. Combine them with this thing that I just mentioned. Support and resistance. Market structure. Trend direction. Trend direction. Example, a bullish pattern at support, strong signal. A bullish pattern at support, strong signal. Same pattern in the middle of nowhere, weak signal. Always try to check what is happening on a resistant level, on a support level. That is why I said always combine with support and resistance, market structure, and trend direction. Think of candlestick like body language in a conversation. Big bullish candle, confident. When you see big bullish candle, that is engulfing candle. That engulfing candle is a candle that dominates. Is a candle that dominates, that is healthy. Small candlestick, hesitation, long wick, rejection. When you see a long wick, market was buying. Before you know it, it will come back with a wick. That a wick shows rejection. That a wick shows the previous move is either buying or buyers or sellers doesn't have strength again or momentum to continue. So long wick is a very sign that this market doesn't have strength to continue. Candlestick patterns are not magic signal. They are clues about market behavior. If you understand the story behind the candle, you will understand the market. That is just very simple. When you understand a story behind a candle, you will understand the market. So whenever you want to trade, always pay attention to something before you be able to understand or find your edge or your strategy. Remember, strategy is a combination of different things that is happening in the market. Combination of candlestick pattern, combination of support and resistance, combination of market structure, combination of trend directions. combination of trend line, combination of a previous market move. So when you understand all these things, that is when you make out one particular thing that is working for you. And just like I said earlier, do well to like, share, and subscribe, so that whenever we are posting a video, you'll be able to see our new video. And in our next class, we may probably talk about chart reversal patterns. This is gonna be the end of today's class. Have a nice day.